An excerpt from the Regulus Financial Astrology Forecast webinar by William Stickevers.
We're going to see a brief, like a last hurrah, if you will, a real last hurrah, where we see people accelerating. You know, we're going to see home values. Some home values will start creeping up a bit. We'll likely see consumer behavior. People are going to spend money what they don't really have. We're going to see the use of quite a bit of credit. So it's a sense of, it's like a bullish consensus. So what I'm seeing here is this eclipse hitting the NASDAQ right on its ascendant descendant axis, October 28th. Now, if we just look back here, when is the worst weeks or the worst months, I should say, for the NASDAQ historically? Well, September, right? And then we also have October here. So definitely September so we have an eclipse hitting in October. So we'll likely see from this. Now, eclipses go into effect about 30 days prior to the eclipse. So it's quite likely we'll see the NASDAQ peak sometime between, you know, the NASDAQ will hit a peak around July, and then, you know, we'll continue at this, you know, very like probably around July 17th into September, we'll see a peak in the NASDAQ. And then 30 days prior, this is October 28th, we'll likely see a big sell-off. We're talking about somewhere between 20 to a 50% sell-off, depending on what's going on here. So this is part of this larger deleveraging that is still in play, right? This is like the leveraging period that happened back in 2000. I remember, right? They said it's fine, everything's fine in the summer of, we had the summer of 2000, and then by the fall, the market started falling again. So we're going to see this deleveraging continue to happen, but this summer, particularly this summer, there's going to be quite a bit of this sense of bullish activity, right? Okay. Now, what's also very Jupiter-Pluto is this persistent crisis-driven inflation and looming debt default. Now, Jupiter-Pluto also is sort of like the last hurrah where we see peak investor sentiment. It's you know, where we see inflation, you know, core inflation. So we're talking about not necessarily the price of things going down because nobody's buying those products. I mean, we're talking about core inflation. So legendary macro and geopolitical psychoanalyst Martin Armstrong forecast in the beginning of 2023 chaos, and that's exactly what we've been getting, particularly when we saw a near meltdown in the banking system, or at least in the regional banking system. And in a recent interview, Armstrong voiced his concerns about the U.S. economic and political landscape in 2024 election. So in terms of inflation, right, now basically with Jupiter-Pluto, he's saying that there is a lot of deep state meddling in the broader financial system in order to keep the economy propped up, to maintain the current administration in power. So this is sort of a form of election manipulation. In fact, Armstrong outright said that he predicts the 2024 elections will likely be manipulated to ensure a second term for Biden or another neocon candidate. So that's a form of also he's stating that the core inflation numbers are much higher, much higher than what the Fed is letting on. They're manipulating those numbers. That's another aspect of the neocon, or the neocon influence. And you know, Armstrong highlights the inflation rate, where he says is over 26%. Now, according to his calculations, it's 26%. He mentions that the Federal Reserve Chair Jay Powell won't lower interest rates due to war-induced inflation. The reason for this inflation, a lot has to do with the fact that a good chunk of the world's natural gas and oil supplies are no longer trading, and we're seeing the food supplies, particularly from wheat and other supplies, are no longer trading. So these type of the Russian-Ukraine situation is, part of the reason we're seeing core inflation issues. And then, of course, the debt default. Armstrong predicts that because of all this leverage in the system, that the Western world or the neocons or the globalists or the elite intend to default on all its sovereign debt, which he sees as a desperate move to due to the sense of dwindling power. In other words, that the US dollar, fiat currency, banking cartel system is no longer sustainable or tenable. So Armstrong anticipates them to make a massive default, which would lead to a reset. Now, this is nothing new for most of you, but this is something that really falls in line with this larger Jupiter-Pluto. The fact that he said this during a Jupiter-Pluto alignment, which is still operative, indicates that he's saying this is indicates that to me that we're still in this deleveraging that can lead to a default and reset event. And what's interesting here is, even though they claim, right, the Fed claims that inflation has gone down substantially, the rate hike odds are spiking after a strong GDP. So, right, the gross, the big upward revision of the GDP is hiding the extent of the weakness in pending home sales data. And so that's one of the reasons it sent the U.S. macro surprise index back to near recent cycle highs. So what we're seeing here is a more than 50% chance of 2 more interest rate hikes. Now, we need to keep in mind that it was the interest rate hikes that began in March of 2022 that led to the collapse of 5 banks, which totaled the financial damage was far greater than the totality of the 2008-2009 great financial crisis. So we have thousands of regional banks and local banks that are on the precipice of defaulting. And the fact that the core inflation issue, right? So now what markets are getting overheated. They will get overheated while we continue to have core inflation issues. And if we look at another chart here, the Fed interest rate expectations jump now to an 87% chance of a 25 basis point rate hike at the July meeting. So, and the futures market sees a 39% chance of at least 2 more hikes by October. Markets are now pricing in a 5% chance of 3 more rate hikes in between now and the end of 2023. And 4 weeks ago, only 2 rate cuts were expected. So here's the point. The last time the Fed rate was at 5.25% was in April 2007, just before the great financial crisis or recession, or the Great Recession, however you want to term it. Actually, it was both a financial crisis and a recession that occurred simultaneously, just months before. Now there is discussion on raising, right? The futures markets are betting that they're going to move it to 5.50%, while the markets are overheating, while it's Jupiter-Pluto, and that will be followed by Jupiter-Uranus, both very inflationary, are going to be heating up, accelerating the markets. And right, so we're going to see much more inflation. They're going to play it down. They're going to tell us inflation is like, 5%, 6. So right now they're saying core inflation 6%, and regular inflation's 4%. According to the shadow stats, figures that inflation right now is around 14%. And we're likely to see that go past 15 up to 16% between now and the end of the year, especially with the fact that they'll be forced to raise interest rates. So look, when you have interest rates this high with this much leverage and debt in a system, you add in the Jupiter-Pluto factor, you add in the Jupiter-Uranus factor, you are now on the precipice of a major deleveraging event. So we're like very close. We're just months away now, right? And we're likely to see interest rates possibly go up to 6%, 6% due to the inflation, due to core inflation. So with the Jupiter-Pluto alignment, the economic crisis is brewing as the U.S. money supply continues to contract. So we have a lot more, so we have core inflation increasing. At the same time, markets are overheating. GDP is spiking. Consumer sentiment is declining. And at the same time, we see this troubling scenario of the U.S. money supply declining. So we're seeing the sharpest decline since the 1930s. And this is important because adding to the distress, the banking sector is facing significant challenges. So the money supply is diminishing while the interest rates are going up. That's part of the reason of what led to the collapse of Silicon Valley Bank, Signature Bank, First Republic Bank, right? So this is going to continue to cause ripples throughout the financial world. So meaning what's happening right now with the markets don't make sense because there's a lot of back-end manipulation. There's a lot of things happening with the too big to fail investment banks, right? So there's this, so part of the crisis, right? We had, the first phase of this crisis occurred. Well, actually, the first phase of the crisis started in 2022. Then this part of the crisis in regards to the banks, due to the dwindling money supply, due to rising inflation, being exacerbated by the Jupiter-Pluto square, all basically emphasizes that the regional banking fiasco or near fiasco still poses an imminent risk of credit contraction in the foreseeable future. So when you see this type of scenario where the U.S. money supply is falling at the fastest rate since the 1930s, and the M2 money supply is the benchmark measure of how much cash and cash-like assets is circulating in the U.S. economy. So how much cash is actually circulating? Like, think of like oil in an engine, right? You need a certain amount of oil within an engine, or the engine will begin to seize up. So with the combined balance sheet of the Fed, the ECB, the Bank of Europe, and the Bank of Japan, we're seeing a sharp decline since the COVID crisis. And this correlates very closely to the beginning of the decline in the markets. So we saw the combined balance sheets of the Fed peak sometime in late, let's see here. Yeah, about late 2021. So the next 6 months will be very significant and will have a set of impact on the various asset classes.
To watch the full quarterly forecast and more, go to WilliamStickevers.com. Register for the Regulus Financial Astrology Quarterly Forecast today.